Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. You know, this truly is, if you've been watching this channel in 2024, tomorrow's TA today. We've been on the GFC fractal pattern nearly all year. And now everybody on YouTube and their grandmother is doing comparison videos to 2007. People are just now realizing, hey, wait, the Fed's funds rate was the exact same, 5.25%. Hey, wait, I just noticed the market topped on the exact same day, July 16th, 2024, July 16th, 2007. Hey, wait, the Fed cut rates 50 basis points just like they did for the first cut in 2007. Oh my gosh, they cut rates on September 18th, the exact same day in 2007. No shit. Guys, if you've been watching this channel in 2024, you've been well ahead of the curve. I gave you the summer top and drop for the 10.5% decline to the penny, to the fib. Everybody else told you the market, oh, let's trade the next leg down. I told you it would rally back up with the Fed rate cut. Why? Because we did that in 2001. We did that in 2007. We've rallied back up to a new all-time high in 07, just like we did in this cycle. I even predicted the 50 basis point cut when the market had only priced in a 13% chance of that. How did I do that? Because that was the first rate cut in 2007. Guess what? I can tell you the next two rate cuts, 25 and 25. Why? Because that's what we did in 2007, guys. The similarities are all there. Everybody's making the videos now about the similarities. What we should care about is we have finally entered the blow off top targets for the market, for the S&P. The $51 trillion market, the third most expensive market in U.S. history, about to be the second most expensive market, which was another prediction of mine. We are less than a point and a half away on the Shiller PE of making this the second most expensive market in U.S. history, including 1929, going back to the 1880s. But what does Wall Street care about now? This is what you guys need to pay attention to, because remember, it's not what you know, it's not who you know, it is what Wall Street cares about and what they're selling to the sheeple that are out there. The sheeple, they want to tell everybody the narrative is soft landing, new bull market, the Fed has your back, there will be no recession. Look at the market just going up. This is the soft landing. It's proof of the soft landing. They totally have brushed aside the historic 100% accurate indicators for a recession, such as the yield curve. What do they care about now? It's what we're going to focus on. Unemployment, right? Unemployment. Lee, I need my SOM chart while I catch my breath. The SOM rule, guys. Bank of America, my previous employer, as you guys know, they went back to 1953. Look at the chart. Look at the column on the right. Every single time the SOM rule has been triggered for every single recession, you have already been in a recession by at least 1 month. I believe we are already in recession. The market doesn't believe it yet, and that's fine. Again, we trade the price action. We trade the patterns. How else do we know we are in a recession or heading into a recession? Since we only care, meaning Wall Street only cares about unemployment now, what about the job revisions? Historic job revisions of 818,000 subtracted from last year's total. Does that mean anything? We're going to catch all of you new subs up. Lee, roll the clip.
And it's interesting, Bloomberg's Cameron Kreis has noted that in 3 decades of Bloomberg data, there has never been a cumulative 1-year downward revision of 500,000 jobs or more without a recession. What do these revisions really say to you at the end of the day?
So we would expect the numbers to be off. This off is pretty dramatic. It's the largest that we've seen in 15, 16 years. It's about 1.5 times larger than any other downward revision that we've seen. So it's a pretty big deal.
The greatest amount of job revisions by a factor of 1.5, and you have to go back to the GFC to get anything similar to this. And every single time job revisions have been greater than 500,000, in Bloomberg data going back 30 years, you've had a recession every single time. Now, I saw a couple of comments saying, but Brendan, Claudia Sahm has been on a bunch of podcasts and, she's saying her rule doesn't have to apply. It's not even her rule, first of all. That rule existed for a long time. She just applied a moving average to it, okay? But she's backtracking and saying it doesn't have to apply, blah, blah, blah. Why is she doing that? Well, easy answer. She's a political hack. Do you know what her former role was prior to being at the Fed? She was the economic advisor for Obama and Biden. Okay. She wants her Wall Street deep state puppet Canada, Commie Harris, to get in there. So you can't sit there and say, oh, we're definitely heading to a recession. Claudia Sahm would much prefer if Trump was elected, if she wasn't out screaming in the streets because he got elected, right, and crying. If he was elected, she would much prefer to have the recession then and then blame it on Trump, right? Trump's tariffs did this. Guys, this recession is going to happen no matter who gets elected. Be aware of that. The difference to me is, will this be a depression combined with World War III, or will it just be a run-of-the-mill recession? The reason you need to understand that we are in a recession is because recessions have average drawdowns of 33% in the S&P. The average bubble drawdown, which everybody who watches this channel know I believe we are in a massive super bubble, the average bubble drawdown is 50%. The market has never put in its cycle low prior to a recession, meaning the S&P, the NASDAQ, the Dow, Bitcoin, everything will take out the cycle low. On Bitcoin, that's 15.5. On the S&P, it's roughly 3,500 on S&P futures. The NASDAQ will take out the low. Everything will take out the low. How can I say that with such confidence and enthusiasm and emphasize it? Because if it doesn't, it would be the first time in U.S. history. If we are not in a recession, it's the first time since World War II that the unemployment indicators were wrong, okay? Understand the government just had the largest single month government hiring spree in U.S. history to get the unemployment to tick down from 4.3 to 4.1. Why? Because the election is less than a month away. And they have tried everything to get Trump to not be in this election. They impeached him twice. They accused him of being a Russian spy. When that didn't work, they weaponized the justice system and went after him. When that didn't work, what do? What's left? Oh yeah, you almost kill him twice. That's what was left. And now we just had a potential third event here just yesterday. I don't know the details on that yet. But in California, the sheriff said it was a third assassination attempt. So we'll see. I've seen other people on Discord saying, nope, it was just some nut job with guns. We'll see. But guys, understand what's happening. The volatility is going to rise, whether it's because of the election. You could take a dart, right? Throw it out at the dartboard, put a bunch of things up there. China, Taiwan, Ukraine, Russia, US, Russia, Israel, Iran, the Middle East in general. There's a bunch, oil spike, bunch of different things that could be the catalyst. I'm not here to predict the catalyst for you. I'm just here to show you what the cycles are showing me and share that information with you. Forecasting and trading are two separate things. I don't make any money by being right about a forecast. I make money by trading, right? Trading when you think you have a top, when you think you have a bottom. That is how you make the money. What I'm telling you is the cycles are telling me, the fib levels are telling me that we are in the blow off top reversal range, which is of absolute importance to everybody. Guys, if you're new to this channel, be sure to like the video, subscribe to the channel for this information. If you want to be a member of our Discord, you can join right through the join button there on YouTube. Try it out. Fantastic community. I hope to see everybody there. And guys, let's get into the charts and go over these levels because this is what I have been waiting for. the beginning of the end of the cycle, the key reversal zones, the key targets, the patterns that accompany them. Lee, before I stop talking, let's just go ahead and get this show on the road. All right, guys, we're going to jump right into the charts. Guys, if you want to trade these markets, you live outside the US, check out SimpleFX. You can trade all the equities globally, commodities, Forex, cryptos. That link is in the video description. I'll pin it right in the YouTube comments as well, because they're going to be having a large tournament that's going to be starting very soon. I'll be making an announcement on it, and you're going to want to participate. Get our special market maker bonuses with our link, and it helps support the channel. You want to trade purely in cryptos? Check out Bitunix. That link also in the video description. So let's go ahead and start off. Guys, I've made a lot of predictions based on cycles, based on Fibonacci. I was sharing the Dow circle with you, the spring and fall equinox circle, and measured in degrees with you. But I want to talk about some of these because there's a lot of really fascinating events that took place here. So when we looked at our cycles, just a quick review from our January 2022 high out to the end, right? Friday, October 11th, 1,008 days, Fibonacci cycle of 144 bars, 34 lunar cycles, the exact top in 2007, October 11th, 2007. And what did we do? Did we top? No, we made a new all-time high, and that's continuing. We got a pivot off of it to the upside, entering our reversal zone based on Fibonacci of 5,900 to 6,100. I'll show you that in the charts. We had our 2-year timing cycle kick in as well, 104 bars from the cycle low to the exact bar. Again, a pivot. Remember, cycles are pivots. You're looking for pivots, and we pivoted to the upside. I made a video 2-3 weeks ago, October 2nd, rally killer, right? And what happened with that prediction? Well, many of you already know. We topped September 30th with a new all-time high. We held that all-time high for almost 2 weeks, and that was the top based on that eclipse cycle that kicked in, right? But it was temporary. The larger cycles took over. We're moving up. And this is what we're going to look at in the charts. 5906 here at the time of this recording here on Monday afternoon. Some interesting things I want to show you. Dow theory. Now, you're not going to see anybody else on YouTube do this with Dow theory, right? They'll talk about the Dow transports. They'll talk about the retracement levels. 33%, 66%, 99%. The esoteric theory behind Charles Dow, what he was doing, talking about the market moving in waves, its natural cycles. He took a geometric shape, the circle, divided it for retracements. 50%, half the circle. 33%, 1/3 of the circle. They're also used as expansionary ranges. I spent a lot of years collecting Charles Dow's original writings. He never wrote a book. All the books were written by other people after he died. And I collected his original writings, and it's some of my favorite things that I own. But let's look at this, because you obviously know about the retracements, right? You look at the pandemic. What'd you fall? You fell 36%, roughly 33%, right? And then you know about the gains. You know about the gains coming off the pandemic. But look at this. Where did we get holed up at? Or on September 30th, for about 2 weeks, we held up right at 5840 on the S&P. Let's go to 5840 on the S&P, 5841. Look at the number, 66%, right? That was your top for 2 weeks, 66%. It's an expansionary ratio. W.D. Gann also wrote about the natural halving and doubling in the market. W.D. Gann, Charles Dow, and Richard Wyckoff all knew each other, okay? This is important to understand. A lot of their work in some ways is built upon each other's work. So when you look at this, this was a 66% move. You held that level for 2 weeks. You moved up. The natural doubling in the marketplace. Let's talk about that for a second. Let me go show you this with the trend-based fib. Take a trend-based fib extension. Let's go to the pandemic low, up to your previous all-time high, January 2022, down to your cycle low, 6136. Do you see that? 6136. So again, we got up to 58.40, held it for a couple weeks, a 66% move. What about if we get to our target, remember 5,900 to 6,100? What about if we get to our target there at 61.36? What move would that be? Measure this up to 61.36, a 75% move. 3/4 of the circle. More importantly, since we used a trend-based fib for that target, let's take it from the pandemic low. Pandemic low up to 61.36, a 180% move. Why is that significant? Expressed in degrees, this is your pivot points. Spring equinox, a 0 or a 360. Fall equinox, 180. You just passed the fall equinox a couple of weeks ago, 180%. 180 degrees on the circle. It's a pivot point, okay? Understand that when you're looking at esoteric cycle theory with patterns. Most of the market tops and major crashes and most of those market bottoms have happened around the spring and fall equinox. Been over this many times. The market breakdown in 1929, fall equinox. Go forward, 1987. When did the market break down? Fall equinox, the greatest single point drop in U.S. history at that point. What about March of 2000, spring equinox, the top in .com. When did the market bottom? Fall equinox, I think October 2nd, 2002, just after the fall equinox. What about the market top for 2007? Just after the fall equinox, October 11th. What about the market bottom in the GFC cycle? March of 2009, right with the spring equinox. What about the pandemic? When did it bottom? When was it? March 31st, March 21st, right here on my chart. March 23rd on a weekly candle, 2 days after the spring equinox. Understand these levels are key pivot points in the market over and over again. And if you understand that and you combine that with what you have for confluence for key market cycle tops and key market cycle bottoms, you can use that to trade and make money. So that's the target I'm looking at here, 61.36 based on this pattern. And what is this pattern overall? If you were just using that trend-based fib and you say, well, what kind of move is this? This is nothing more than a large ABC move. You guys have seen me do this over the last, few weeks, month or two, showing you this on all the charts. 61.36, a three-wave move, whereas Gann called it a law of three pattern. The Gann market pattern was nothing more than an ABC that he hid in his books, okay? A three-wave large move to 61.36 gives you a 100% move here, a reciprocal move. And this also gives you 180 on your equinox pivot, on your circle expressed in degrees. This is a key level to watch, 61.36. Now let's move forward. What other levels do we have shyer than this? Looking at this pattern, guys, I showed you this pattern before, this many times actually. Going back to that April low on the S&P futures, April 19th, 2024, look what you have. Again, three-wave move, an ABC pattern, 15.25% up leg, 15.25% up leg, and we just hit the reciprocal target here, 59.05. You're at 59.06. Does this have to drop the market? No, but what's of consequence here is you've entered the reversal zone of that prediction, 5,900 to 6,100, okay? This is the level, the range we need to watch, we need to track here in the marketplace. Let's move forward. What's the key pattern we're looking at? The W pattern, so easily seen on both the daily and of course the weekly. It's a massive pattern. Look at the W pattern. These are reversal patterns, just like you got in January of 2022, which you cannot even see on the weekly. It's not even present on the weekly. That's how massive this weekly reversal pattern is. So you need to pay attention to it. So here's the W pattern. We have price moving up. October 17th is my next potential pivot date you want to look at. Why? Because that is yet another lunar cycle. It's also a supermoon. What does that mean? That's when the moon is closest to the earth that it will have been for the entirety of the year. It's also a near lunar eclipse, meaning not quite an eclipse, but almost an eclipse. And it is also in that time range I originally predicted of the earliest top potentially being October 2nd all the way out to October 17th. You want to watch this. Does that mean it has to top October 17th? No. But what you need to understand is trading for me is about confluence factors. We are in a reversal range of 5,900 to 6,100. We have patterns that are hitting. We have timing patterns potentially hitting. So you want to watch these pivots, guys. Ideally, I want a pattern to be made, such as a double top for a reversal. We have our W reversal pattern. We are moving up. You want to track these levels. If we take our W from wave 3 to wave 4 for fib retracement, you can see that 58.40 level that was holding up beautifully here as our top, and we finally broke it after just about 2 weeks. We're moving up. The 200% expansion is 59.45. Now that we're in the zone, you really want to start looking at this in blocks of 50 on the S&P. 59.50, in other words, watch that level next. You're at 59.06. If we take our fib from the 1 wave to the 2 wave, the 1618 is 6,092. Remember back on the weekly pattern, that reciprocal move from the pandemic low is 6136. Again, I've been rounding this to 6,100. Look at this in blocks of 50. Can we get up to the 6,100? Does it take longer than the 17th? We're going to find that information out. What I'm telling you is be aware of October 17th. This coming, what is that, Thursday. Be aware of that. Look at the price. See where price is. Is it 59.50? Is it 6,000? That key psychological number. And look and see how price reacts. But that we are in that reversal range of 5,900 to 6,100. So pay attention. Don't be asleep for this price action. Hopefully we'll get some type of topping action, like a wave up, wave down, wave back up, double top, right? Hopefully we'll get something like that, because if we just get a spike top like this, get one candle up, boom, candle down, candle down, candle down. Those are harder to trade if you don't know what targets to be looking at and the timing to be looking at those targets. So pay attention, guys. We look at this on the daily. You guys already know this. On the weekly, you have massive bearish divergence. Daily, you have bearish divergence. Price is moving up. It's about psychology. It's about euphoria. These are blow off tops. Let's look at the NASDAQ, see what we got. The NASDAQ. Here we go. So from the pandemic low up to where price got to for your all-time high, a quadrupling off the pandemic low, right? Forget doubling. Here, hold my beer. You got a quadrupling. What about the cycle low? The cycle low right here in green, a 100% move off the cycle low. Let's do our ABC move from the pandemic low, right? Pandemic low to your previous all-time high, November 2021, down to your cycle low. Where did you get? Look at the one fib, 20,623. Where's price struggling? 20,615 right now. It's struggling right here. As a matter of fact, not one candle closed above 20,623. Not even this big spike candle here in the weekly time frame, that is. It closed at 20,524, 100 points below 20,623, and you're testing it right now. Okay, you're testing it once again. Understand how these methods work in the marketplace. It's market geometry, okay? It's not magic, it's market geometry. Be aware of how these can play out. 20,623 is a key reversal zone, but what I want to look at, again, because we have this, look at how large the W pattern is, guys. It's a massive, massive pattern. This is a massive pattern on a weekly time frame, a key reversal pattern, and they have ratios that they adhere to. So let's go forward and look at this on the daily. On the daily, here's our W, right? There's your fib, 20,623. You see that? And look at the daily candles. You got that spike above it. On the daily, you closed above it, and then you fell back down, making this W. Well, let's measure this out. Where could this go? If we take our fib retracement from 3 to 4, 1618, 21,067. That is a key level for me. Why? Because for weeks I've made that prediction starting months ago that we would make a new all-time high in the NASDAQ, just like in 2007. We get to 21,067, you make a new all-time high in the NASDAQ 100, okay? So I'm looking at that move to 21,067. See if we can get up to that level. And of course, we have to flip this 20,623 first. And let's see what we can do between here and Thursday. If we are to get some type of top forming, then that could be a possibility that we don't get there and you struggle right down here at 20,623. but we won't know until we have candles. I would just be guessing just like everybody else. Let's look at NVIDIA, because to me, for the NASDAQ to break out, you have to break. I mean, look at this bouncing like to the penny off the Fib. 139.60, right, is the high of NVIDIA. 139.50 is the Fib based off the W pattern. I think this needs to get up to the all-time high of 149.99. $150. I think NASDAQ makes a new all-time high if that happens, but I think you need to see that happen, and it may not happen. We shall see. If we do get a pivot based on October 17th, we'll see where this price is out at, but pay attention to that date and look at the price action in the charts. When we look at the DAX, guys, same thing. Massive ABC, pandemic low, first all-time high, January 2022 with the S&P, all the way down. Actually, it was over here, November with the NASDAQ, all the way down to the cycle low, back up to here, your 100% move, 20,160. Where's the DAX right now? 19,663. I think it's really worthy of noting that the NASDAQ got that 100% move and it's holding as resistance. And because that was the market leader for this whole rally, tech. Major tech, big tech, Mag 7, then the AI theme came in there. Look at the DAX, only a few hundred points away from completing its massive ABC. I would watch that level, 20,160. Look and see if the S&P continues to move up, if the NASDAQ continues to move up. Look at the DAX and see if you can get that psychological number of 20,000. Let's go ahead and look at Bitcoin. Bitcoin, couple of things on Bitcoin, guys. You've seen me show you this the last couple of weeks now, how we potentially topped with these three-wave patterns, the ABC moves, right? You have your double top here, essentially April 2021, and then you did it again when? In November 2021. Then you had a 70+% retracement down, right? And now I was theorizing we could be doing the exact same move. I was giving you this target based on what? The wave A down to wave B, this entire trading range here. You're getting the reversal like we've been talking about. I've been predicting new all-time highs, as you guys know. The tippy top of my range, once again, would be 98K. I've been rounding that to 100. But these other ranges have been here the whole time, and we have talked about them. 80,000, 89,000. If we do the same type of pattern with a double top, with a new all-time high for your second top, that lower level, 80K could be in play, especially if the NASDAQ does not play ball and stay stuck or barely makes a new all-time high. But watch this level, 80K. Now, that's interesting because if we use the same ABC method from the pandemic low, right? So let's go ahead and do this. Let me get rid of these so you can see this. Let's get rid of these ABC patterns. Let's leave this Fib up here, 80,616. Now let's use this trend-based Fib extension, pandemic low, just like we did the indices. Go to your all-time high in 2021, down to your cycle low, right? 15.5. Look at the green line right on top of the 1272, 80,804. I mean, you can't make that up, right? This is telling me that this is a high probability target if we get follow through in the markets. 80,804 is a 100% move from the pandemic low. Understand the trillions in stimulus. The NASDAQ already did this move, right? That's why the NASDAQ is stuck. That's why the NASDAQ's underperforming. S&P pumping, DAX pumping, Bitcoin getting off its ass and starting to pump. I have Fibonacci confluence with this trading range for the 1272 at 80,804. I have the 100% move from the pandemic low, 80,804. If we can come up, let's look at this on a daily. If we can come up, I drew this trend line for you. Take out this trend line, take out 66K, get on top of 70K, guys. I think you're coming up to the 80,000 level. The markets are euphoric. It's not based on fundamentals. Nobody cares about fundamentals. This is all about the blow off top. It's based on emotion. It's built on emotion. Don't let people sell you why it's rallying. I'm telling you why it's rallying. It's the end of a cycle. It is a blow off top cycle that's going in through all the markets and it's filtering into crypto. And you're going to get this parabolic move and then everybody will get stuck at the top. Everybody except you guys. Let's look at Solana. Solana hasn't started moving yet, really. I mean, it is up. It's at 155. Key level for Solana to get above is 171, guys. Get above 171, puts you back on par with these candles right in here. And let's see what Solana and Bitcoin can do. If Bitcoin goes to 80K, Solana is going to break out above these highs. I think you're going to have Solana break out above these highs. And those higher level targets were 237 and 272. Once we get above these fractals, if Bitcoin can break out to a new all-time high. Hope you guys enjoyed the video. I answer your comments as always. Leave me a thumbs up as well if you don't mind. Hope to see you guys in the Discord. Take care, everybody. See you on the next one.
Make a wish.